Most traders come into this game believing their job is to predict. You felt it in the beginning. That quiet obsession with being right. That deep hunger to look at a chart and say, I know exactly where this is going. You told yourself that if you could just read it correctly one more time, if you could just understand it a little deeper, then you would finally unlock certainty. And once you had certainty, the money would follow. But that belief is the first trap. Professionals don't predict. They prepare. They prepare for continuation. They prepare for reversal. They prepare for no trade at all. And that difference changes everything. You have to understand something that most people never truly accept. The market does not owe you confirmation. It does not owe you clarity. It does not owe you a winning streak because you studied harder this week. Every single moment in the market is uncertain, not chaotic, not random in a reckless way, but uncertain. There is a difference. When you expect certainty, you demand that every trade validate you. When you demand validation, you stop seeing probability. You stop seeing risk. You stop seeing the bigger picture. All you see is whether this one position proves you right or wrong. And that is where accounts quietly disappear. You felt it, that tension in your chest when price moves slightly against you, that inner voice that whispers, I shouldn't be doing this. That subtle frustration when your analysis seems perfect, but the market doesn't respond the way you imagined. You tighten your stop, or you remove it, or you double down because it has to come back. That is prediction trying to control uncertainty. Professionals don't fight uncertainty. They respect it. They don't sit down and say, this will go up. They sit down and say, if it continues, I am ready. If it reverses, I am ready. If nothing aligns, I stand aside. There is no emotional attachment in that approach. There is no ego tied to the outcome. There is only preparation. And when you shift from prediction to preparation, something inside you softens. The pressure begins to dissolve. You no longer need to be right. You only need to execute well. That sounds simple, but emotionally, it is one of the hardest transitions you will ever make because you were taught to value being right. In school, being right meant approval. In life, being right meant intelligence. In arguments, being right meant superiority. So you brought that conditioning into trading. You assumed being right consistently was the goal. But trading doesn't reward being right. It rewards being disciplined. You can be wrong half the time and still build consistency. You can be wrong multiple times in a row and still be aligned with your edge. You can experience a loss that has nothing to do with your skill. When you truly understand that, the illusion of predictability begins to crumble. And that is a good thing because now you can see clearly every trade is just one event inside a long series of events, one coin toss in a sequence. You cannot control the outcome of this single moment, but you can control how you approach every moment. You can control your risk. You can control your patience. You can control whether you trade at all. And that realization is where real growth begins. But even after understanding this intellectually, your mind will still try to sabotage you. Fear is the first distortion. You fear uncertainty because uncertainty feels like danger. Your brain is wired to avoid the unknown. So when you enter a trade, your body reacts as if something physical is at risk. Your heart rate shifts. Your breathing changes. You begin watching every tick as if it carries life or death consequences. That reaction is automatic. If you do not recognize it, it will control you. Fear shows up as hesitation. You see your setup forming, but you delay entry because you're afraid it might fail. Fear shows up as premature exits. The trade is unfolding normally, but you grab profit early because you don't want it to disappear. Fear shows up as paralysis. You sit there, frozen, watching opportunities pass because uncertainty feels overwhelming. And then greed steps in. Greed whispers, you can get more. It tells you that this move could be bigger. It convinces you to risk more than your plan allows. It tempts you to enter when conditions are not clear because you don't want to miss out. You've experienced it. That rush when a trade moves quickly in your favor. That sudden surge of confidence that makes you feel unstoppable. In that moment, you're not thinking about probability anymore. You're thinking about how much you can squeeze out of this move. And greed always distorts judgment. Then there is overconfidence. After a series of wins, you start believing you've figured it out. You loosen your rules, you increase size, you begin to feel invincible. But the market has a way of humbling that mindset quickly. And when it does, the emotional fall feels heavy. Denial follows losses. You ignore the data. You refuse to accept that conditions changed. You blame external factors. You search for reasons outside yourself rather than asking whether you followed your process. Attachment is perhaps the most subtle trap. You become attached to a bias, attached to a direction, attached to the idea that this trade represents something about your identity as a trader. When price moves against that bias, it feels personal. It feels like rejection. But the market is not rejecting you. It is simply expressing order flow. Once you begin noticing these distortions as they arise, you gain power over them. You don't eliminate them. You observe them. You might be in a trade and feel that knot in your stomach. Instead of reacting, you acknowledge it. This is fear. You feel the excitement of a fast move and recognize this is greed. You notice the urge to revenge trade after a loss and say, this is ego. That awareness creates distance. And in that distance, you can return to objectivity. Objectivity is not cold. It is calm. It is steady. It is rooted in the understanding that no single trade defines you. When you operate from that state, you are not chasing outcomes. You are executing probabilities. But preparation requires structure. You cannot prepare if your rules change every day. You need a written framework, not something complex, not something filled with technical language, just clear principles that define when you participate and when you do not. Why do you trade? Not for money alone. Money is a result. But what is your deeper reason? Is it freedom? Is it mastery? Is it proving to yourself that you can operate with discipline? When your why is clear, you stop trading impulsively. You begin aligning your actions with your long-term vision. You also define your conditions. Under what circumstances do you engage? What must be present? What invalidates your idea? If those conditions are not met, you do nothing. Doing nothing is a position. Most traders struggle with that. You feel unproductive when you're not in a trade. You feel like you're missing out. But professionals understand that capital preservation is progress. Waiting is progress. Clarity is progress. Your daily routine matters. How you begin your session affects your decisions. If you rush into charts with emotional residue from yesterday's loss, you carry bias. If you open your platform seeking redemption, you distort probability. Instead, you approach each session neutral. You review, you assess, you prepare scenarios. If price continues, this is my plan. If it shifts, this is my plan. If nothing aligns, I step aside. Notice the absence of prediction in that process. You are not forcing the market into a narrative. You are allowing it to reveal its intention. And at the center of all of this is risk. Most people say they accept risk. Few actually do. True risk acceptance means you are genuinely at peace with losing the amount you defined before entry. Not intellectually, emotionally. If that loss would upset you, your position is too large. Position sizing is not about maximizing returns. It is about preserving mental clarity. When your size is appropriate, you can think clearly. When your size is excessive, you become reactive. A stop loss is not a punishment. It is a boundary. It defines where your idea is invalid. It protects your capital, but more importantly, it protects your psychology. You place it with intention, and once placed, you do not negotiate with it. Scaling in or out is not about squeezing every pip. It is about managing exposure responsibly. It is about reducing emotional volatility. Capital is a tool, not a scoreboard, not a measure of self-worth. A tool. When you treat it as sacred, you stop gambling with it. Losses will come. They are inevitable. But a loss within your rules is not failure. It is data. It is one event inside a series. And when you review that series, you focus on process. Did you follow your plan? Did you respect your risk? Did you execute according to your rules? If yes, the outcome is secondary. If not, you adjust behavior. This is where growth happens. Instead of judging yourself harshly after a mistake, you examine it calmly. You ask, what emotion influenced me? You trace it back. Was it fear? Was it impatience? Was it the need to recover quickly? Then you refine your structure to reduce that vulnerability. You separate random variance from true error. Not every loss is a mistake. Not every win is skill. Over time, patterns emerge and you learn. That learning builds resilience. Drawdowns become less frightening because you understand they are part of the distribution. You do not spiral into self-doubt. You tighten your process. You reduce size if necessary. You preserve clarity. Over time, something shifts inside you. You no longer chase excitement. You value calm. You no longer obsess over daily profit. You think in sequences. You no longer fear uncertainty. You expect it. And in expecting it, you prepare for it. Continuation, you are ready. Reversal, you are ready. No trade, you are content. This is what professionals understand. They are not smarter. They are not gifted with secret foresight. They have simply detached from the illusion of certainty. They operate in harmony with probability. When you reach that state, trading becomes quieter. The drama fades. The emotional swings soften. You begin to experience a steady rhythm. You execute. You log. You review. You repeat. There is freedom in that simplicity. And over months, over years, that consistency compounds. Not just financially, mentally. You become patient in other areas of life. You become less reactive. You understand that uncertainty is not something to conquer. It is something to navigate. Most people spend their lives seeking guarantees. You learn to operate without them. That is transformation. The trader who once needed to predict now prepares. The trader who once feared losses now defines them. The trader who once chased every move now waits with intention. And slowly, almost quietly, you evolve not into someone who knows what the market will do, but into someone who is ready for whatever it does. That is the edge. That is the shift. That is who you become. And once that shift truly begins to settle inside you, you start noticing something subtle but powerful. The need to forecast every tick starts fading. You no longer wake up thinking, what will the market give me today? Instead, you ask, what will I allow myself to participate in today? That small change in language reveals a massive change in mindset, because now the focus is not on extracting something from the market. It is on managing yourself within it. You begin to see that most of your stress never came from price itself. It came from expectation. You expected continuation when it stalled. You expected reversal when it expanded. You expected your bias to be respected simply because you believed in it strongly enough. But the market doesn't reward belief. It rewards alignment. And alignment only comes when you accept that you are operating inside uncertainty at all times. Think about how many times you stared at a chart, convinced that a move had to happen. The structure looked clean. The idea felt obvious. You were almost offended that others didn't see it the same way. And when it failed, it didn't just feel like a financial loss, it felt like a personal insult. That's ego attaching itself to prediction. Professionals do not attach. They prepare scenarios. They look at the same chart and quietly say, if it continues, I will engage here. If it shifts, I will adapt there. If neither presents itself clearly, I step aside. There is no internal argument, no emotional debate, just clarity. And clarity comes from deep acceptance of one truth. You do not control outcomes. You only control execution. Once you accept that fully, you stop trying to force trades to work. You stop widening stops because you know it will come back. You stop jumping in early because you're afraid of missing out. You stop revenge trading because the last loss bruised your pride. Instead, you start thinking in sequences. 1 trade means nothing. 5 trades mean little. But 100 trades executed with discipline, that's where the story is written. You begin to understand that your edge is not a prediction tool. It's a probability filter. It simply gives you a slight advantage over time. That advantage only expresses itself across a series of trades, not in a single moment. And when you truly internalize that, something changes in how you experience wins. You stop celebrating them as proof of superiority, and you stop fearing losses as proof of incompetence. They both become normal. There's a calm neutrality that begins to grow inside you. But neutrality doesn't mean emotion disappears. It means emotion no longer dictates behavior. You might still feel that small wave of discomfort when price pulls back. You might still feel excitement when a move accelerates. The difference is you don't act from those sensations automatically. You observe them, you breathe, you return to your plan. And that discipline is built before you ever click the button. Preparation happens in silence. It happens when you define risk clearly before entry, when you decide the amount you're willing to lose and genuinely accept it, not just writing it down, but truly making peace with it. If losing that amount would disturb your sleep tonight, your size is too large. It's that simple. Because the moment fear becomes overwhelming, you lose objectivity. You start managing the trade emotionally instead of logically. Professionals understand that survival is the first priority. They don't aim to win big today. They aim to still be here tomorrow. That long-term thinking is rare. Most traders are obsessed with immediate results. They want fast growth. They want quick recovery. They want validation now. But growth built on emotional instability always collapses. When you treat capital as a tool rather than a trophy, everything changes. You stop measuring yourself by account balance fluctuations. You measure yourself by execution quality. Did you follow your rules? Did you respect your defined risk? Did you wait for your conditions? Those questions become more important than profit. And when you live by that standard consistently, profit becomes a byproduct. There will still be periods where nothing works. Drawdowns test your character. You will experience weeks where your edge seems invisible, where every idea feels slightly off, where confidence starts to whisper doubts into your mind. This is where preparation becomes deeper than strategy. You prepare mentally for drawdowns before they arrive. You expect them, not in a negative way, in a realistic way. Because if you know uncertainty is constant, you understand that variance includes losing streaks. When they come, you don't panic. You reduce exposure if necessary. You review calmly. You tighten discipline. You protect capital. You do not abandon your system after 3 losses. You do not start searching for a new strategy in desperation. You remain steady. That steadiness is power. It's quiet power. invisible to outsiders, but internally it feels unshakable, and something else begins to evolve. Patience stops feeling like deprivation. Early in your journey, waiting feels painful. You watch price move without you and feel regret. You question whether you're being too cautious. You feel tempted to act just to feel involved. But over time, you realize that most movement is noise relative to your plan. You begin to appreciate stillness. You become comfortable closing the platform when nothing aligns. That ability to walk away is one of the strongest signs of maturity, because now you are no longer seeking stimulation. You are seeking alignment, and alignment requires energy. Mental energy is limited. Every impulsive decision drains it. Every emotional reaction weakens it. So you protect it. You build routines that preserve clarity. You avoid overtrading. You avoid staring at screens unnecessarily. You give your mind space to reset. This is how you sustain the zone. The zone is not excitement. It's not adrenaline. It's not constant winning. It's a state of flow where you execute without friction, where your actions feel consistent with your beliefs, where you are neither chasing nor resisting. You simply respond, and that state is fragile if built on prediction, because prediction ties your emotional state to being right. Preparation frees you from that. When you prepare for continuation, reversal, or no trade, you are emotionally covered in all scenarios. There is no surprise. If it continues, you execute. If it reverses, you execute. If it stalls, you observe. You are never caught off guard because you already considered the possibilities. This is what separates reactive traders from prepared professionals. Reactive traders chase. Prepared traders wait. Reactive traders fight the market. Prepared traders adapt. Reactive traders measure success by outcome. Prepared traders measure success by consistency. Over time, that difference compounds. You may not notice it in a single week, but over months, the psychological gap becomes massive. You start trusting yourself, not because you win every trade, but because you know you will follow your process regardless of outcome. That trust is invaluable. It creates emotional stability, and emotional stability creates longevity. Longevity creates opportunity, and opportunity, when handled with discipline, creates growth. Eventually, trading stops feeling like a battle. It becomes a practice, a quiet discipline, a reflection of how well you manage uncertainty within yourself. And when you look back at who you were at the beginning, chasing certainty, desperate to predict every move, needing validation from every trade, you barely recognize that version of yourself. You've evolved not into someone who can see the future, but into someone who doesn't need to. You understand that professionals don't predict, they prepare. They prepare for continuation. They prepare for reversal. They prepare for no trade. And in doing so, they prepare themselves. That is the real work. That is the transformation. That is the path you're walking now. As you continue walking that path, something else becomes clear. Preparation is not just a strategy adjustment, it is an identity shift. In the beginning, you saw yourself as someone trying to figure the market out, someone decoding patterns, someone searching for the perfect insight that would finally make everything click. Every new concept felt like a potential breakthrough. Every failed idea felt like a setback. You were chasing mastery through information. But over time, you begin to understand that mastery in trading is not about knowing more, it is about reacting less. The more you prepare instead of predict, the less you feel the need to constantly adjust. You stop jumping from one idea to another. You stop second guessing yourself every time price hesitates. You stop looking for reassurance from others because your confidence no longer depends on being certain. It depends on being consistent. That's a completely different foundation. When you prepare for continuation, you're not hoping it will happen. You're simply acknowledging that it could. You define where you participate. If it does, you define where you step away. If it doesn't, There's no emotional charge in that process. When you prepare for reversal, you're not trying to call the top or the bottom. You're not trying to impress anyone. You're waiting for conditions that align with your rules. If they show up, you act. If they don't, you remain patient. And when you prepare for no trade, you are doing something most traders never learn to do. You are honoring the power of restraint. Restraint is uncomfortable at first. It feels passive. It feels like you're not making progress. But in reality, restraint is active discipline. It is the conscious decision to protect your capital and your mental clarity. Most losses do not come from complex mistakes. They come from forcing trades that were never there. You've felt that urge. The market is slow. Nothing seems clear, but you want action. You convince yourself that maybe this setup is close enough. Maybe this time you can bend your rules slightly, just this once. That's not preparation. That's prediction, disguised as impatience. Preparation says, if it's not clear, I wait. And that waiting builds something inside you that is more valuable than any single winning trade. It builds trust in your own discipline. Trust is earned through repetition. When you consistently follow your plan, regardless of outcome, your mind starts to relax. You're no longer in conflict with yourself. You're no longer debating every decision internally. You know what you will do before the situation even appears. That removes emotional friction. And when friction disappears, execution becomes smooth. But this smoothness only comes after you confront your relationship with uncertainty deeply. Most traders think they accept uncertainty because they know losses happen. But acceptance is not intellectual acknowledgement. It is emotional peace. You truly accept uncertainty when a losing trade does not disturb your sense of stability. You truly accept uncertainty when you can close a loss and immediately look at the next opportunity without revenge in your mind. You truly accept uncertainty when you reduce size during a drawdown without feeling embarrassed. That level of acceptance takes time. It takes repeated exposure to discomfort. You have to experience losses without reacting destructively. You have to feel the urge to overtrade and choose restraint instead. You have to sit through stagnation without forcing activity. Each time you choose discipline over impulse, your identity shifts slightly. You are no longer the trader seeking excitement. You are becoming the trader who values longevity. Longevity requires emotional efficiency. Every emotional spike drains energy. Every internal argument consumes focus. If you trade from a place of constant emotional turbulence, you burn out quickly. That's why professionals appear calm, not because they feel nothing, but because they manage themselves deliberately. They know that clarity is a resource. They protect it. You start doing the same. You review your trades not to criticize yourself, but to refine your process. When you see a mistake, you don't attach shame to it. You analyze it. You trace it back to its root. Was it fear? Was it impatience? Was it overconfidence? After a win, then you adjust your behavior. You don't need to punish yourself. You need to correct yourself. That difference matters because punishment creates emotional resistance. Correction creates growth. Over time, your mistakes become teachers rather than threats. You begin to see patterns in your own psychology. Maybe you notice that you tend to take unnecessary trades after a strong win, or that you hesitate after 2 losses in a row, or that you increase size subtly when feeling confident. These insights are valuable. They show you where your preparation needs strengthening, and strengthening preparation is ongoing work. It's not something you complete once and forget. Markets evolve, conditions change, your life circumstances shift, your energy fluctuates. So your routines must remain adaptable while your principles stay constant. Your principles do not change. Respect risk, wait for clarity, execute consistently, protect capital, Review objectively. These are anchors. Around those anchors, you adjust details as needed, but the foundation remains steady. And as months turn into years, you notice something extraordinary. The market no longer feels intimidating, it feels neutral. There is no emotional charge attached to it anymore. It's not an enemy, it's not a savior, it's simply an environment where uncertainty is normal, an environment where preparation gives you structure, an environment where discipline creates freedom. That freedom is quiet. It's the freedom of not needing to trade every day, the freedom of not needing to recover losses immediately, the freedom of not needing to prove anything to anyone. You sit down, you assess, you act when appropriate, you step away when it's not. There is no rush, and this absence of rush is powerful because most market participants are rushing. They are chasing moves, chasing profits, chasing validation, chasing recovery, chasing excitement. You are no longer chasing, you are aligning. Alignment with probability, alignment with discipline, alignment with risk, and alignment creates consistency. Consistency compounds. It compounds financially, yes, but more importantly, it compounds psychologically. Your confidence becomes rooted in process, not outcome. Your stability becomes independent of single trades. Your mindset becomes resilient. When you reach this stage, you realize something profound. The real skill in trading was never predicting direction. It was managing yourself within uncertainty. And once you master that, you carry it beyond the charts. You become more patient in life. You become less reactive in difficult conversations. You become more comfortable with not knowing how everything will unfold because you've trained yourself to operate effectively without guarantees. That is transformation. The person who started this journey wanted certainty. The person you are becoming now doesn't need it. You prepare for continuation. You prepare for reversal. You prepare for no trade. And in preparing for all possibilities, you remove fear of any single outcome. That is emotional freedom. That is professional thinking. And that is who you are steadily evolving into someone who does not predict the future, but is ready for it, whatever form it takes.